Hello and welcome to Earnings with ET Now, and TCS as always has started the earnings season with a bang, with market beating performance, with a strong commentary, and they clearly have raised the bar for the IT industry once again. So to talk about the magic potion which has worked for TCS for the quarter gone by, I have with me the CEO and the head of HR. Gentlemen, congratulations on another sterling quarter. You know, I'm actually I'm frankly running out of words now to congratulate your performance. It's just been excellent. So, I mean, it's so heartening to see that what you indicated a couple of quarters ago, you've actually delivered that. Where do we go from here?
So, Nikunj, it's exactly like you said. What's best about this year's performance is not just the numbers, but it's the fact that all elements of our strategy have come together nicely. Whether it be our focus on Business 4.0, even more importantly, our talent strategy and our confidence in doubling down on our talent, and each and every TCSer should be really proud of this performance because it is a TCS core performance and we are proud of each of our people. And the passion that TCSers have, that is what has stood out in this. So that sets us up very nicely. So that's because the strategy is working, the team is fully charged up. We have shown that we have in it to transform from inside, and the TCS pride and passion is coming out. On top of it, we have the numbers because the exit on a constant currency basis is at about 3.6%, which is almost a percentage point higher than what it was last year.
Same time last year.
So, and if you look at the segments, we had wide variation in performance of segments. So BFSI was very weak, retail was very weak, North America was very weak at the beginning of the year, so end of last year. Whereas if you look at our segment performance, every line is doing very well. They are close to the average. Some are slightly below, some are slightly above. But the whole portfolio is stable and things. So we are very, very confident on taking on whatever is ahead of us.
Okay. So the word cautiously optimistic is officially out of your dictionary now. It is the word confident which is back.
Confident and yet cautious. No, we are. I mean,
I'm just not forcing you to choose words, but I'm trying to gauge your body language, and your body language is now not starting with cautiously optimistic; it is starting with confident.
That's
and
right.
For me, that is a clear indication of what you see forward.
Absolutely. Okay, as I said, everything, both from a strategy perspective, from the people perspective, the team perspective, from the opportunity side, I think it is out there, and it's up to us to execute and capture it.
Joy, this must be an emotional day for you. I mean, I've been interacting with you for about 15 years now. You've been with TCS for nearly 3 decades, and you've really, managed to build a world-class team and an institution itself.
Almost 4 decades, yes. So, and we have been interacting for so many quarters.
Yes.
So it's been a great experience as far as I'm concerned. I joined as a kid when I was 21 years old, directly from BITS Pilani, came into TCS as a trainee, and it's been a fantastic journey. And each and every day has been great learning from the kind of people that we have had in TCS. It's amazing.
So I'll come back with some personal questions, but let's just first, understand the numbers also. The productivity numbers are showing, and this is what you were telling me, I think 3 years ago, that you are looking at investing in reskilling and rekindling your workforce. Are the numbers looking that strong because of that large investment which TCS decided to park with their employees? When everybody was, in a sense, downsizing, TCS was hiring, and when everybody was, retraining, you were actually reskilling.
See, our whole philosophy or our whole faith from the very beginning, if we see, has been that, I think Chandra articulated it once, that it is technology that becomes legacy. It's people never become legacy, right? And see, from when we started, it was mainframe. From there we went into networks, from there we went into Unix to PCs, then the internet and all that. So there has been, technology has been changing over a period of time. But if you look at TCS's investment and core belief in its own people has been solid. And there's a business reason for it. Because if you're working for a customer, if you're working in an industry, you get to understand what that customer does, how that customer works, what that industry is doing. You get to get a lot of knowledge which probably you can't really document it somewhere. So it's something that is inherent with you. So and that is very difficult to, let's say, replace. So you will find technically an equivalent person, but you can never replace a TCSer who has gone with, let's say, 7-8 years of experience. That's critical, and that is the reason why we said, and looking at, I think the way we planned our strategy and everything, we looked at the way digital was coming in. We knew it is going to be digital. So as a result, we had to, there was no option, but we had to invest and we had to train, and that is playing out.
Okay.
It definitely is the strength.
I'm just looking at data what we got at the press conference, which is that your order booking now is north of $20 billion, which is more than what you've actually done for the full year. Which means if you execute this order book, double-digit growth is not only back, but it is here to stay. I'm putting 2 and 2 together. Is my arithmetic right?
The numbers are right in the sense that this quarter we have closed a TCV of $6.2 billion, which is our highest ever, leaving us the one quarter where we did the very large deals. So that is reflecting it. How this translates and how this plays out, I don't want to get drawn into it. As I said in the beginning, we are confident, well positioned, and we intend to maximize the opportunity in front of us. And the core of it is what Ajay said and what Ajay epitomizes, that it is not about this year or this quarter. So when we think about technology, this rate of change of technology will only keep on accelerating. That will actually make us even more relevant to our customers because of the contextual knowledge that Ajay spoke about and our ability to continuously retrain our people. Ajay himself, over 39 years, I mean, the kind of different areas that has been worked on, that is the core belief that we have, that as TCSers, we can, it's the other way around. If we can't do it, the technology doesn't come pre-built with people who understand it. Yeah. Somebody has to understand, other than the product people who created it, someone has to actually understand it. More importantly, they have to make it work in the context of the customer. And that is the magic sauce of TCS. So Ajay is really, I mean, it's, as I said, he epitomizes what TCS is all about. 39 years of continuous relevance.
Okay. The digital business is growing. It's the culture. I've always praised the culture. I mean, the way teams talk. As managers, we sometimes struggle with small teams also. But TCS manages about 3.5 lakh people. So it's quite incredible. I mean, I've got my highest regards for what TCS as an institution is.
4,24,000.
4,24,000. I was waiting for that number. I'm glad you spoke before I spoke. Okay, I have to understand the digital piece. It's growing at 50%. $6 billion broadly is where that piece is sitting at, which means by 2021, not this calendar year, but 2021, it should be nearing $10 billion. What happens when that becomes $10 billion?
It's again, say, in fact, we are quite now starting to think about, should we be even talking about digital going forward? This year is over. It is now broad-based. It's almost a third of our revenues. And we need to start thinking about how do we think of some other constructs to describe it. But to your question, what happens when it is $10 billion? What happens when it is 15? It is the same question as to when the web was growing strongly. Is that after the web saturates what? See, we are betting on human ingenuity. I'm sure that this is not the be-all or end-all of all innovation that will happen. There will be something new that will come about. There will be new business models to be created. There will be new exploitations of new technologies to reimagine existing industries and existing business models. Our positioning is to ride each wave. Our positioning is not to ride an SAP wave or a ERP wave or a web wave or a digital wave. Our positioning is to make technology work for companies, for societies, for people. And therefore, we are technology agnostic. And that is where the training strategy, the talent strategy is so critical. So I am sure that something new will come around, and we need to be disciplined. We need to be focused to capture that, and that will carry on the same way.
Okay. You also mentioned the press conference that the wage inflation this year is going to be a hike for employees would be good, which in my term I would use the word wage inflation. Mm-hmm. Could you throw some more light on it? What exactly are you trying to imply here? Is this something which we should take real notice of in terms of cost planning for next year, or when I say next year, this year?
As far as the increment numbers are concerned, that I mentioned in the press conference, it will be varying from country to country. and it depends upon the inflation in the country, it depends upon the benchmark that we do, our compensation vis-a-vis the market and where we stand, and based on the competencies. So it is on an average, in some country will be 2%, some countries will be 4%, and some countries will be 6%. So that is the kind of wage hike that will be there. And it takes into account business unit performance, it takes into account individual performance. Now, wage hike, this will definitely result into an increased employee cost. But then there are various ways of taking that into account. One is of course the business mix, one is of course the way you are managing the whole, let's say, operational efficiency, if you want to term it. And then on the other side, there is also an expectation in terms of the overall macroeconomic point of view, the way the currency would react. So all that, these things are factored in. And the increment that we did last year was pretty similar. So as a result, I think it's a challenge that I'm leaving for my successor to manage. And I think we should be able to do it. So it's something that we should be able to do.
What has changed in between last 2 quarters that growth in areas like BFSI, North America has made a comeback? Why?
It has been about a fairly steady one. One of the things that is working for us is this whole Business 4.0 paradigm is resonating very strongly with customers. In fact, we just did a survey of 1200 enterprises and their use of the underlying 4 business pillars and the 4 technology pillars of Business 4.0. And what was amazing was that majority of them have used at least one of them, and almost 10% have used all 4. So this is something that we have tapped on to something that's very fundamental at the cusp of this growth and transformation agenda of customers, and we are participating in this growth and transformation. So we have earlier it was on the cost and optimization side. We are now tapped into the growth and transformation agenda, and that is where the incremental growth is coming from. And that is what is feeding this continuous relevance.
Are you growing because market is growing, or are you growing because you have a differentiated strategy?
That is for the market to decide. Definitely we have a differentiated strategy, and we are fairly unique in that. I think we provide to customers a seamless path all the way from the core technology to the business agenda, and our ability to actually transcend all layers of the organization and all layers of a heterogeneous technology stack that they have. Because we are not saying that I am a legacy player or I am a new age player. The real organizational context is it has persistence over time, it has heterogeneity across a stack. Our ability to appeal across both these dimensions for a given customer is a differentiated strategy. We have built it as one integral entity. We are not a combination of different technology groups. We are not a patchwork of bought together and bolted together entities. We are true ground up built organization, and not just the strategy, the organization structure and the organization culture is hugely unique. There is nobody else in this industry who has this, and that is the differentiation that customers are appreciating and why customers are engaging with us.
I've got a couple of non-quarterly related questions for both of you. Joy, I'll start with you. Maybe a 30-second answer, 40-second answer. What has been your biggest learning when you've managed such a large task force? As an HR head, what would you say that what really should be a focus for future HR managers when it comes to managing service sector?
I think the best thing is what you have to clearly understand is what people want. You have to be closer to the people. You have to ensure that and in the technology sector, everybody would be looking for challenging engagements.
Okay.
Because unless and until you are able to give a challenging assignment, it will be very difficult for anybody to be motivated and continue. So that is the one that one needs to look at. So only way you can do it is by giving an environment where everybody is respected, where everybody gets to learn and build their career.
Such a nice tip coming from Joy. Couple of questions for you. What is one thing you would like to change about TCS, and what is one thing you would not like to change about TCS ever?
The one thing that I wouldn't like to change about TCS is the great team that we have. It's a phenomenal team, a phenomenal culture. I would really want to continue with it. One thing to be changed is even more aggression in participating in new opportunities, and I think we are doing that and continuing to execute on that.
Who's one person who's influenced you a lot?
Chandra, 100%. It's a continuous learning. Every year that I worked with him has been a huge imprint on me.
How do you travel and stay fit? How do you travel and stay fit?
I do a lot of dream run. I dream, I run.
So Joy, what's, we are talking about Infosys 4.0. What is Joy 2.0 now after retiring?
Just relax, sleep, and then be with family. So that is what is Ajoy 2.0.
Well, so nice to have both of you. Congratulations, and it's so heartening to just see what you committed to the markets and committed to press. Right. You've actually achieved it. I mean, to get double-digit growth back after a gap of 3 years on such a large base, I think it's an incredible feat. So congratulations, and Ajoy. I'll miss talking to you next quarter. You've been a great friend and always the well-wisher of the channel. So it's just been a pleasure and an absolute delight interacting with you.
Thank you for all the affection and everything else that you've shown towards me. Really appreciate it.
With that, for the moment, it's back to the studio. Fantastic and all-round performing quarter for TCS. We were in an engaging conversation with Rajesh and Ajoy, and we understood the big picture. But now let's get down to specifics, what customers are indicating, what margins TCS should be working with, when will they go back to their prescribed band of 26 to 28% and rupee. So these are a couple of variable factors which I would like to focus with NGS and with Ramki. Gentlemen, thank you for joining us.
Thank you.
I just want to clear the air on the electoral bond from a market standpoint, from a viewer standpoint, because over the years I've tracked TCS, I've never heard you commit such a large number to the electoral bond. Why this need has come suddenly?
First of all, it's not an electoral bond.
Okay.
There's a difference between that, and this is a contribution to an electoral trust.
Okay.
So this is a trust. It's been set up by the Tata Group, and it's been in existence for at least 6 to 7 years.
What is the purpose of the trust?
So it is essentially to contribute to campaign finance.
Okay.
So in a very transparent, in a very open and manner. So that's the objective of the trust. So this is a contribution in that regard.
TCS is 50 years old. You've never contributed that much. Suddenly, why are you contributing 220 crores?
We have contributed in the past much smaller amount, but there is always a beginning. There's always a beginning to anything. So it has happened. It's a election in this year, so it's happened. Yeah.
When you say it's a beginning, what are you trying to indicate?
No, I'm saying when you say if you have not done anything in the past.
Okay.
So it's always when you do it first time, it is a first time. Right?
First time and beginning. I just want to differentiate. This is for the first time.
Yeah.
Okay. The customer interaction. That's, I think, what we should be focusing on. What has changed in between quarters? 2-3 quarters ago when we met, you were confident. Right now, the numbers are just speaking for themselves. $6 billion of order book, great order win. What has changed so much? Because the headline for US economy is that economy is going to slow down. The headline for the US economy is that the tax rate sugar cut which American economy enjoyed, it's getting over. But your business touchwood is growing phenomenally.
At the outset, it's been a standout year for us, and we said that we'll get back to double-digit growth. As a management team, we were extremely focused on it. Happy where we are today. Happy how we are entering the new year, right, at the first point. The second is that there are always macroeconomic issues, and we've always maintained that we have to go out there, look at clients, where they are investing, what is the growth, innovation and efficiency stories that will play out for them, and then participate in all of that. And then we clearly crafted our thought leadership framework in terms of Business 4.0, workplace, workforce transformation. In order to participate in large digital engagements, you need all of this to come together, and so that we can stitch together and participate in those opportunities. Exactly what we have done. So if you take UK or a market or Europe as a market, Brexit was one of the most talked about items of the last 4 quarters. But we always maintain that Brexit is there, but then there are always opportunities that. So UK has grown 22% year on year, 18% around that in Europe. So overall, I think our focus in terms of investing in the opportunities and making most out of it is clearly the paying off.
How confident are you as we migrate to a new financial year?
See, the last quarter, we said that, look, our margins were a bit weak, and we said that, look, we have consciously invested and acquired talent, and then said, look, sir, we can participate in this. So we'll never shy away from that. We'll always keep investing it, and launched about 20 plus digital offerings through the year. and each one of those offerings are picking up. And where we are, we have clearly an exit rate which is going to help us, at least a percentage point ahead than what we had last year. So overall, I think, having worked hard and focused in terms of getting into a double-digit strategy growth, there's no point in going back.
Is double-digit the new normal for TCS? I asked this to Rajesh. I didn't get a clear answer, but I'm asking you.
I mean, I think, as I said, look, that's a good goal to have, certainly. And then, see, I'll put it this way, right? I think from an operations perspective, having set a vision or a goal that we got to get back to double-digit growth, rallied the whole company behind that.
Okay.
So I think there's no point in going back into that. I think we are continue to work on that. Some of the strategies and the investment that we have made are paying off. I think we'll continue to leverage that, and I would say there's a solid foundation, and we have to use that foundation and leapfrog from here.
Okay. So to summarize your comment, if macros don't go bad as per your press conference or as per your press release, double-digit growth is the new normal. Yes or no?
There's always a new normal, and as I said, look, we would like to be in that kind of position, and there's enough. I would say, personally, I feel that I'm more confident that where we are entering the new year, and there are opportunities, and we have signed a good deal pipeline. And the pipeline is good. $6.2 billion worth of contract signing happened in fourth quarter alone. And then we are working on good opportunities. From where I stand and see things, I think we are looking good.
It's good to see that confidence. I haven't heard you that confidence and that bullish. I appreciate that and appreciate your frankness. Ramki, now the specifics are that you had a rupee tailwind last year. That was huge. Some of the rupee advantage might have got negated because of cross currency and other currencies you deal in, but rupee was definitely an advantage. What will you do this year if the rupee tailwind does not come in terms of margining maintenance? Because at a large base now, are you confident of getting all the levers back?
See, rupee depreciation is sort of intrinsic into our model. Yeah. So obviously, last year, while rupee depreciation, the impact was there, the benefit was there. It helped to take care of the increases, right? Despite I would say, if you really look at the numbers, what you got by the currency was sort of neutralized with whatever increases and compensation and things like that.
So what happens this year? Let's say rupee stays at 70.
If rupee stays at, I mean, if there is a sharp rupee appreciation, yes, it will have an impact. But within a certain narrow range, it is always baked into our environment and we manage. There are still levers which we can work, but individually none of them will be huge, but together they still have the opportunity so to make our margins resilient, and that's what you have seen also over the past periods.
Okay. Now, Ramki, Rajesh was confident, NGS is super confident. Order book has gone up, base effect has kicked in, leverage is on your side. But what is stopping you to going back to your peak margins? If business is growing at its peak, if order book is at its peak, if the client, optimism at its peak, why are margins are not at its peak?
Some of them have to be qualified. So client confidence, it cannot be.
No, these are not the best margins with the best growth. All I'm saying is that the order book, the visibility, the environment in the last 3 or 4 years, this is the best I've heard you guys over the years I've interacted with you. With this, I was hoping that I would get a better margin picture. That's my limited point. Why that is not happening?
We have actually expanded our margins by 79 basis points compared to last year.
I appreciate that, but that's not the best.
So, and that is clearly coming out of the levers and the operational efficiencies. So from that perspective, I think we are quite very satisfied with where we are and on the trajectory. So we don't see this as an overwhelming factor.
Okay.
Right. Yeah.
Fair point. I think 4 quarters ago when we met, you said the aspiration is to get back to double digit, and you've achieved that. What is this goal number this year? What is TCS rallying around this year? Double digit growth is back. So what is that new aspiration which you would be rallying the organization around?
Well, I think, participate in more and more growth and transformation engagements.
Is that a number you're chasing? Double digit was a number.
Putting a number, I think we'll be limiting ourselves.
Okay.
There are enough opportunities out there. and we need to go and participate in every growth and transformation opportunity, and we need to make sure that rapidly deliver the business value that our customers are expecting. And
are we at an explosion of that kind of a demand coming from your key customers? If digital is growing at 50% at a $6 billion base, $6.5 billion base, for me the word I would like to use explosion, because that's explosive demand.
No, there is demand out there. As I said, we are out there to capture the demand. Second is that we have hired, we have added net about 30,000 people this year. From an offer perspective, we have given about 30,000 offers already from a talent test that we conduct in a democratic way. See, overall, we are gearing ourselves for capturing the demand, no doubt about it. In all our major markets, every single market we are operating is growing at double digits, except the Middle East and Africa. US is 9.9%, and it's just getting there. But overall, I see that there is a demand environment is good, our pipeline is good, and we are having our engines and cylinders, all cylinders are working.
Fair point.
And our ability to add another cylinder to a running car is well tested.
Okay.
We are launching about a service every month, a new service line every month, and each of the new services that we have added last year is gaining a lot of traction, more than about $250 million worth of projects that we are executing in each one of them. So overall, I think we are there capturing the digital demand. The business 4.0, location independent agile, the cloud migration, TCS Interactive, this is as a combination is so powerful. So powerful.
And they can price open demand.
Yes.
The latent demand can be priced open. So
no, that's
the
I
most
think it's a
important
follow-up
part.
of that. What you've been very investing in, it's coming because of that. So, Ramki, just to clear the air, TCS has done 2 buybacks. The stated policy has been that you would be giving cash back to the shareholders. But whenever the law permits, will buyback be a way to return money back to shareholders?
That's one of the instruments, definitely.
So it's not that you will stop at just
No, that
2
will,
buybacks.
that will be part of the overall capital.
How much cash would you like to maintain in a balance sheet? Because if you're doing buybacks, ideally the cash levels will come down. So,
but
what is that number?
cash levels come down, but we are also generating a significant amount of cash, close to $8,000, 8,000 crores. So, while we had a buyback of 16,000 crores, we had a dividend of about 11,500 crores. Our cash balance has actually increased by 2,000 crores compared to last year. Today we are at around 49,500 crores, which is 2,000 crores higher than the last year. So we'll continue to. So as we generate cash, we will look at the requirements, and based on if we can deploy it in the business, and we will certainly do that. To the extent where we do not see that immediate requirement, we will continue to have a capital allocation policy of 80 to 100% of our free cash flow.
Just to break it for a non-sophisticated financial viewers, and we have lots of them, millions of them actually. If you do a buyback, your share capital comes down. If share capital comes down, the return ratios will change. Where do you think your return ratios will settle?
Share capital comes down by a very small margin.
But return ratios change.
So it goes up. Your EPS goes up marginally year on year. But that's more than that's one of the what you call the side benefits or a
So
derivative.
there is no internal number in terms of where do you want the return on equity to settle?
That's right.
No, there
is no such internal number, because this is just a derivative.
Okay.
And our focus will be to grow the business, generate the cash, and convert every dollar of profit to cash. And we continue to do that and have a very clear, consistent capital allocation policy. The rest of the numbers will follow.
Okay. Final question. Accepting macro, what could go wrong? Which could just force you to look back at your commentary?
It's very difficult to say that, but overall, as I said, we're happy where we are as we enter the new year. There are some softness which I see in certain customers in banking, financial services, both in North America and Europe. Manufacturing in North America this quarter has grown well. We are seeing some green shoots. I think we should wait for another 1 or 2 quarters before we say that manufacturing is really kicking up. Telecom, we are seeing customers looking at 5G a lot more in detail, starting to invest in that particular front. So it will open up more and more opportunities. But at this point in time, they are really working on some of those things. So barring some of these things, I think overall looking good.
Okay, I think we've got only 30 seconds for this answer. TCS normally gives a conservative commentary. When a conservative company starts using the word confident, what should I understand from that?
Confident equal to conservative.
We'll leave it there,
Yeah.
Gentlemen. Thank you for joining us, and it's just been one of those great quarter for TCS. So wish you all the best for this financial year.
Thank you.
Thank you.
Appreciate it. Bye.
Well, back to the studio for the moment.